Okay, hello traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, January 17th. Great to be with you guys this morning. Kamal's in the house. Marco, Mark, Peter, Pete, and Ty. Great to see everyone here in the room. Hey, D. Amen. Great to see you, JL. Always a pleasure, sir. So, interesting market conditions. You might have gotten a hint yesterday from my report. I'm kind of reluctant to really get in too heavily on any singular position right here, guys. The markets are kind of acting weird. There's so much event risk and headline risk that's kind of floating around. You got the negotiations with the U.S. government shutdown. You got the Brexit debacle, which gets you crazy swings in specifically all the sterling crosses we've been watching. But my point being is a good time to tread lightly. If there's a lack of clarity in price action, we wait. Being flat, as cliche as it sounds, is a position. And I just want to, put out a word of caution there to everyone at this point. We're seeing some pretty nice moves here, but we want to make sure that we're being very meticulous and cherry picking our entries. Good morning, Michael. How are you? Hope all is okay. Thanks, E-Man. Great to see you. On the mend. It's going to be a while, but on the mend as always. So let's jump over some of the setups that we've been covering. I guess we'll go over yesterday's update first. But before we get into the dollar CAD, by the way, the consolidation looks like it's resolving to the upside here near term. I just want to go over the DXY real quick because this is big stuff heading to the close of the week. Look, a quick note, obviously Monday is going to be Martin Luther King Day here in the United States, so markets will be closed. It won't have a daily FX weekly strategy webinar, but we'll be right back here on SB on Tuesday and Thursday as regular. But we're coming into an extended holiday break. And these are always tricky with the volatility that we've seen this week in markets. Good time, again, just to kind of keep some powder dry here. DXY on the weekly chart. This is all you need to know. Okay, it's the same levels we've been watching. We're looking for a validation of the break of the ascending channel off last year's low. You saw that the 52-week moving average kind of dipped, or excuse me, the 200-week moving average kind of dipped into it here. You have that slope, again, that same 38.2 line holding support on a closed basis. Here's the rebound. Ultimately, we're still looking for the break lower. Even if this rallies right back to former slope channel or former channel support, now resistance, largely speaking, we're looking to validate a move lower here in the DXY. So on a weekly basis, you had divergence into a high with a channel break. This is kind of what we need to see some follow through to get things going. Intraday, or let me just show you the daily. A little bit more room to the upside before you run into anything major. You're testing monthly open resistance right here. Just higher, got the 50% retracement of the decline from the December high and basic slope resistance or channel resistance. So, a little bit more possibility for another push higher here in the DXY. Wouldn't be too surprised. Charts are pretty clear here as far as what we should be looking for. Here's the intraday. And here's the intraday chart from earlier in the week on the DXY. Same levels, no change, okay? Remember, big resistance, like we just noted, 96.37. You got the 50% retrace. You got slope resistance there. Near-term supports, the 100-day moving average, sliding down a little bit, but it's right around the 96 handle at this point. 95.65, that's your sort of bearish or bullish inval. That's the break we need to mark resumption, I should say, of the broader downtrend. But right now for DXY, the focus is either failure here or here. If we get through 96.37 on a push here, there's really nothing to stop this thing from heading towards 96.70s. It's basic 618 of the decline. But this is where we want to see failure essentially if the move is going to be lower in DXY. So no change to any of those levels that we highlighted earlier in the week. That retracement is actually right on point still. That's still the same high that we registered. And we're basically looking for exhaustion ahead of 96.37. Any questions on DXY? Pretty easy here. Nothing really too major to talk about. But my point being, to reflect back on what I was saying earlier in the session, like this price action, hasn't been all that exciting, right? You're really tight range. You're not really in a directional trade. We kind of broke earlier in the week, and we've just been sitting underneath ever since. So it's either a stretch into here for some failure. If we get a drop, I need to see a reaction here. I wouldn't necessarily buy it. More so, that would be the target if we get the drop. But it's really the break below 95.65 that would get resumption of the broader downtrend. And again, based on the weekly charts, there's a lot of room for a move lower if we get that break. Okay, so the levels for the DXY pretty clear heading to the close of the week. Watch how we react here if we do stretch higher towards that 96.37 level. So that's DXY number one. Now let's go back to last night's update and let's go in order here with dollar CAD. So the dollar CAD move, here's what we looked like last night. And again, this is something that we highlighted right into the start of the week, guys. We were talking about this level and the fact that we were setting up a weekly opening range right above that 50% retracement. You saw consolidation there. For me, I would have wanted to get the drop down to one of these levels to get the long, or if we get the breakout, I am actually looking to fade a rally back towards last year's open, 34.22 range, 34.35 range. In my opinion, would be a decent fade opportunity. But right now, looks like this near-term consolidation is attempting to resolve to the upside. Here's dollar CAD. Okay, so even if you bring this into like a 60-minute chart to give you a better, closer price action, looks like we failed in overnight. Here's the secondary push. A basic 38.2 is 33.65. Again, bigger region of resistance, 34.22, 34.34 is going to be last year's open, and a basic retracement of that near-term decline. So you also have some slope there. You see this purple line here, guys, is just basic trendline support. Trendline support, break saw acceleration. That same level converges on that key pivot zone, 34.22, 34.35. So that's sort of the target if we push higher here in dollar CAD. Now, there's a couple things I want to highlight ahead of that, and this is where kind of the breakdown of near-term price action becomes more beneficial to you, especially if you're near-term trading. You have an extension here off the low that brings up an interesting level. So if we just measured move, the 100% gives you 33.40. And then if we take some basic slope, okay, this is going to look kind of messy. Let me change the color just to make this a little bit easier to see. Look where we converge. Again, highlights 33.65 as near-term target. This is what I'm worried about right now on this stretch. 33.40, and then that channel comes in just higher. So if you get this run today, especially in time, basically to the close of the week, look for a reaction here. Maybe a decent pullback might get you an opportunity to get back on the long side here looking for the stretch. But this would be the first area I'd look for on the stretch higher in the dollar CAD move. Also, kind of objective measured moves. Okay, if we just take technical analysis 101, your consolidation or triangle measured move break, okay, 100% extension of that stretch or an equal leg higher takes you right into 33.65, 33.70, 33.69 is the measured move. So even if we're just trading this on a triangle breakout type of trade, price should extend into 33.40, 33.65. Okay, so how you look to approach that if you're not already in this trade, again, be nimble. The market conditions are not best. They're not the ideal intraday trading position at this point as far as the environment's concerned. If you're holding stretch on the dollar CAD advance right now, look at 33.40 to clean up a little bit, take a little off the table, stops to break even or higher, 33.65, 33.69, bigger area of resistance here on this initial stretch. Questions on dollar CAD. Interesting stuff here. Interesting stuff. Finally getting a resolution. You know, this thing was sitting there in the weekly opening range all week long. It's Thursday. What a great time to get the opening range break to the upside. Again, clearing the way for further advances towards the weekly close here in dollar CAD. That is number 2 on the session. Any questions on Loonie? Here's the daily chart to put things in perspective. And even more so, the weekly chart. Remember, this thing broke support, rebounded off big resistance. Longer term, I am still looking lower. But certainly what we were looking at on the near-term charts and the way this thing has been reacting, the recovery, or at least a near-term recovery in price, is certainly what we're focused on at this point. All right, number 3 is Kiwi. So look, with Kiwi, we got the drop into support that we're looking for, and it pushed lower. So honestly, I don't really want to do anything with it right here. Here's Kiwi dollar. The level that we were talking about is 67.48. That was the key support barrier. The play for me was the downside move into that region. If we hold below 67.58 or 67.50, basically 67.48, that would validate a larger decline. You're looking for 67.16, 67.17. You're looking for the monthly open down here at the 67 handle. Here's what it looked like last night. This was the region that I really just want to see if we can get, if I wasn't holding anything on this, just a disclaimer. But if you're holding shorts, that's the level of which you would have been looking to take off most of that position. Stops to break even. The breakout, or the breakdown, I should say, in this case, still looks for 67.17. Again, 67, a pivot low in price, also ends up being, like I said, the monthly open, 67.02. So nice targets here. Again, looks like you're breaking real clean upslope support. By the way, this slope that you see drawn here in red is just a parallel extending off the yearly low. Here it is on the intraday charts. Here's the 240. Okay, this is just simply the same slope that we were following here. 1 touch, 2 touch, 3 touch, break, saw acceleration. A same parallel of that extending off the low for the year for January that we made. Gave us a perfect touch there yesterday. And again, that's why the break here, this is what I want to see hold as resistance to sort of validate the break of this upslope. Okay, so look, if you're not already short here, unfortunately, there's nothing to do at these levels. You're trading at fresh weekly lows. We've obviously made a clear break of the initial weekly opening range earlier, in the week yesterday, basically. So it suggests you should be looking for a Thursday, Friday low. This was a big spot for me. If we continue to move below here, again, 67.17, 67 areas of interest. But, I wouldn't be looking for any new fresh short dollar exposure from these levels. There's just nothing prudent to take a stop against, at least in my opinion, from here. I didn't have this slope on the report yesterday because I didn't want to clutter up the chart. But again, just working with some basic slope action here off the highs. You take a parallel of that slope, extend it off these lows, perfect touch, perfect touch. This is why right now at the moment, I kind of don't want to just get short, right? You're testing that 38.2, you're testing slope support. It's not really a conviction break, nor is it a conviction rebound. So maybe this slope isn't all that. I didn't want to clutter up the chart yesterday, but caution here for anyone holding shorts on the Kiwi. You could get some back and fill here. Basically below 67.90, you're still at risk for further losses. That's like the 200-day moving average. But ideally, I'd more so be interested in seeing what a reaction down here looks like on a move lower. Any questions on the New Zealand dollar? All right. Interestingly enough, on the Kiwi breakdown, that put into play a really nice move on Aussie Kiwi, which was something that we've been following for a while. So here's Aussie Kiwi. If you guys remember from last week, the whole focus of this thing was, look, if this pitchfork is in play, price should hold above. Bullish invalidation, rather, is the yearly open, 105, essentially. The opening range low for the week last week was 105.42. That was our first area of support. So we're essentially looking to see if the slope has any merits. We want to see support ahead of 105.40. Bullish inval we noted as 105. Fast forward to last night. Here's the pullback. 105.40 holds as support. Bullish inval still 105. Top side break above here, as we noted yesterday. We were looking for that breach. We want to see 106.38. First area of support. Next area and bigger resistance, 106.84. Okay, it's a 50% retrace, and that's the exact parallel. For this, really assuming pitchfork, really, it's kind of a stretch there. I didn't really like how we how we put that on there, but it's continuing to hold, right? Here's Aussie Kiwi as we stand now. Whoops. Here's the 120 minute. Okay, and here's the move. So looking for response higher here, topside targets unchanged. Again, we hit 106.38 just earlier this morning. 106.84 is going to be that 50 in the median line. Okay, so watch for that as we head to the U.S. trade session. Keep in mind a couple of things, guys. We're in overbought territory here. This says two things to me. If you're holding long positions and you took a little off at 106.39, as you should have, you want to go break even or better at this point. I wouldn't bail on it, right? The market is in overbought. As long as that condition holds, this thing could continue to move higher. So break even, stop or better. It's a clear break of the weekly opening range, a test of the weekly opening range highs as support, and a move higher. Looking for a Thursday, Friday high. Nothing really scaring me out of this one, guys, but looking for a tag of the median line. 106.84 would be an exact 50% of the decline. Okay, initial support now. Okay, now initial support is going to be that former swing high. That converges on the parallel right here. Okay, bullish invalidation now gets raised from 105.02 to the objective weekly opening range lows right around 105.40. Just a little bit lower is the actual stretch low, so keep that in mind. But that's the only thing that would shift my focus like lower, period, in Aussie Key. Not surprising, right? With the reaction that we saw in Kiwi for Aussie Kiwi, to see some upside thrust here. My point being, guys, is that this is the monthly opening range high. So on an objective standpoint, this is what we need to essentially clear. Here's our monthly open, by the way. This is essentially what we need to clear to validate an upside bias heading to the close of the month. I do have a soft target here on the daily chart. Looks like it's the low close for February. I'm going to just put that in there. It's a pretty decent pivot in price. We're on 106.60. Watch that if you're holding positioning on this. But essentially, it's the 106.84 break that would be sort of breakout trade finally in Aussie Key. Any questions on this one? Levels are pretty clean, okay? The only thing we just added was that 106.60. I put that as a soft target, but certainly it's been a pretty decent pivot in price, so I think it's worth keeping an eye out. The 50% is the bigger play along the median line there. All right. Questions, comments, concerns on Aussie Kiwi. Interesting pair here, testing the monthly opening range highs into the close of the week. I don't really have any positioning on sterling, but I do want to go over the levels because, obviously the Brexit talks are just all over the place right now. So here's the levels. Look, they're unchanged. It's uncanny what this thing has been doing. Here's sterling dollar on the weekly chart. All I want to highlight here, guys, is the same level that we've been talking about ever since the rebound that we made into the start of the year, into the close of last year. Remember the 2016 post-Brexit low week close, 124.33. That was the rebound. That's basically where we bottomed out. First level of resistance, the first major threshold is still 129.70. Into a little bit higher is where you have that pitchfork resistance. Okay? It's all about this breakout. If we mount 130, 129.70 on a weekly close basis, we're looking for 31.80, plain and simple. That's just an initial basic 38.2 target. Eman saying, is Aussie dollar on your list? Sure is. Yeah, Pooja, I didn't go over the list with you guys early. Sorry about that. Yeah, it is. We still got Euro, Kiwi, Gold, Euro dollar, obviously, and Aussie dollar to go. Probably should have given you the list earlier, but for the sterling, so basically, guys, 129.70, 130, that's all that matters for the British pound on the long side. Here's sterling on the daily chart, okay? Further highlighting that upper median line parallel pitchfork resistance right here, 129.50s. Again, 129.70s, that 618 retracement of the decline from the September highs. Again, this breakout, in my humble opinion, would unleash the long side in sterling. Aside from the headlines and the Brexit, disaster and, disorderly deal, no deal, I'm not playing, the game. I'm looking at price action. Okay. And the funny thing is, again, on this decline, when this thing ripped lower and they simply pushed out the vote for a couple of hours, it was an ideal long position. It was ideal. And we even talked about this, right? Look where it bottomed out. And here's the rebound. So again, near-term resistance at the weekly opening range high at slope, not 29.70 on a closed basis. Again, would validate the larger breakout in the British pound. Whether that's prompted by some sort of economic release, or whether that's headline rather, I don't know. All I know is that above the yearly open, on real strong knee-jerk reaction lower, unless there's a material development, price looks poised for further advances. Guys, objectivity. Okay, objectivity. Never take my word for anything. Everyone who's been screaming to high hell that sterling is going to just bottom out because of Brexit obviously hasn't been looking at the weekly charts, because literally for the last 5 weeks, we've closed higher. That's right, 5 weeks of straight back-to-back advances in sterling. So for everyone who's sitting here, screaming that Brexit is going to be the end of sterling, obviously hasn't been looking at objective price action here on a close-on-close basis, higher for the 5th week consecutive here. Divergence into a trigger break to the upside on the weekly chart. There's so much to look at here, guys, but the advance is checking the first area of critical resistance. That's right here between 129.40 and 129.70. Okay, if it's going to fail miserably and sterling is going to break to a new low, this is where it would happen. Okay, so watch for a big pivot here. This is absolutely critical, specifically on a closed basis for the week. I do want to see a reaction if we get a stretch into 29.70. Are we done with euro? No, we haven't hit euro yet. Still on the list, euro and Aussie. Okay, according to that, doesn't gold look more poised to the upside than to the downside, says Eman. It does. It does. I will go over gold in a moment, Eman. Any questions here on sterling before we move off? I guess I can jump to gold right next. Here's the gold trade, and Eman, you know where I stand on gold. Okay, the thing with this thing is, look, it's a bullish trade long term. The near term, and I've been highlighting this to you guys here, I put out a piece yesterday on Daily FX about it. The near term advance, to me, in my humble opinion, 1302 is still my line in the sand. What's 1302? It's last year's open. Nothing special, nothing fancy. It's just the yearly open. But it also comes right above basic slope resistance. And again, I don't like to use these pitchforks, guys, where the reference point is kind of in la la land, just use an arbitrary, level like that. I hate those levels. But what I do want to highlight is that this median, or this slope, is based on these two support. 1 touch, 2 touch. That gave us the gradient. When we matched that gradient up with the pitchfork, everything started to fall into play. 50 line was support. Support, we broke below it, was resistance, break, saw acceleration. Median line again, resistance, break, acceleration. Here's the upper parallel. Here's last year's open at 1302. Here's price action at the highest levels in momentum that we've seen since the peak back here in 2017, since the peak back here in 2018, and price is at resistance yet again. Okay, so don't get me wrong. I'm still constructive on the broader trade. I think this is within, on a weekly standpoint, guys. This pitchfork from 2013, 2016 low, 2015 lows is still in play. Here's the pivot, catching the highs in 2016. Here's the low, catching the highs in 2018. Right? But on the immediate approach, I think we're at resistance, man. Eman says, thank God I'm long at 1287, Not ideal entry, I know. Yeah, so look, on a trade like that, again, man, my humble opinion, not a trade recommendation from SB per se, but I would go break even on that because if it gets below 1287, I do expect a deeper pullback. And if we get the deeper pullback, man, I think you get a better entry for the long. What I've been telling you guys is this. Let's go into the daily chart. Okay, here's gold on the objective. Where art thou? Here we are. Objective daily chart, right? There's that slope, upper median line parallel. There we are. Couple things to note. Why I like this trade. A, you have an objective monthly opening range still intact. Here's your January open. You set a high, right? Just below 13, 1298. You set a low just below the monthly open, 1277. You're still within that range. So an objective monthly opening range break will give us the tell here. Eman saying, yes, I did on my break even now. Okay, cool. Yeah, that's just how I would play. Again, we're on the same page with regards to the broader outlook. It's just where we are right now in price, right? So the objective monthly opening range low comes in right at that huge confluence of slope targets, basic slope support off the November lows, former channel resistance off the highs from back in August, longer term slope back from the 2015, 2016 lows, right? There's the slope, break, acceleration. That same slope is right here. So any way you slice it, 1276 is huge. Okay, it's huge. It would necessitate a break of the monthly open. It would necessitate a break of the monthly opening range lows. And would necessitate a break of all of these slope considerations we just highlighted. All right. Now, if the opening range resolves to the upside, or this near-term consolidation, which I'll show you the intraday chart in a moment, resolves to the upside, my concern, okay, is that you still fail here. Last year's open, key pivot in price, former swing lows, break, saw acceleration, resistance, now converges on the same slope. This is just a parallel of slope support. There was resistance, and again, 2-point touch here. I know it looks very subtle. 1 point on the 27th, another point on the 31st of July. Perfect tag. Now converges again on 1302. So my concern here, guys, is that this thing rips higher, and this is where we get the tell, in my opinion. Either rips higher, fakes everyone out, and then this is where we fail, and then you get the larger correction. And then we would look to, again, reposition on the shorts on the long side if we get down here. Or if we break through and we resolve above 1302, I think this thing rips. Now, the implications for the US dollar, again, I don't want to put an if-then statement, right? We could rally in gold and not necessarily turn down in the dollar. But that's my concern on the back of a stretch like this for this breakout to just resume higher. I think it would take either like a pretty strong risk-off scenario or a pretty dramatic turn down in the dollar. So, you're getting, again, divergence, maybe not so much strong divergence, but there is a 4-point trigger break here, didn't materialize into much. So the trigger and momentum is there, not yet in price. So this thing is so hairy, guys. This could go either way. Here's the 120-minute chart just to give you some reflection on where we are in near-term price. Again, consolidation. That's as clean as it gets, guys. That's as clean as it gets. Okay, so look similar to what we're looking at in dollar CAD, right? Which broke to the upside here already. If gold breaks to the upside, look for a reaction at 1302. If we clear this on a daily close basis, I'm all with you. 1321, let's do it. If it breaks this consolidation and fails or spikes or can't even get an hourly close above this, again, my humble opinion, that would be screaming exhaustion at me. And I'd be looking to fade that for the move lower. So it's make or break for gold here over the next couple of days or so. Typically these consolidation formations break 10% ahead of the apex. So we're basically approaching that region today, which means a breakout is essentially imminent in gold. And guys, aside from everything we just talked about, forget what Mike Boutros says or Jamie says or anything. Here's the weekly open. Weekly opening range low, weekly opening range high. You have it set. It's Thursday. look for the break for guidance. Okay, objectivity is key. E-man, does that help on gold? Yeah, I've been getting a lot of questions on this, and man, I've been following it like a hawk. Unfortunately, until we clear this godforsaken range that we've been in all week long, we kind of need to sit tight. Okay, we kind of need to sit tight. I'm short from 1292, thinking about taking out some at 1286. So 1286 is support. Mohammed, I'd be 100% with you on that mentality. When we're trading within the confines of an opening range, within the confines of a consolidation formation, yeah, all my targets are inside. Mohammed, on a trade like that, I would take out the majority near slope support. I wouldn't even wait for 1286. And then if you want to leave a quarter off, a quarter on the table, you want to leave a little bit on, if you do get the break to be positioned, fine, I'm with you on that. Go break even on the rest and let it play out. But yeah, while we're within the weekly opening range, within the consolidation formation, yeah, keep your targets on the inside. Because once we get the breakout, you're likely to see an accelerated move. Mohammed, does that help? I mean, good entry. You're in the money right now, but watch that near term trend line support off of the yearly lows. Okay. Amen says, yes, Michael, thank you so much. You're more than welcome, Amen. Okay, thanks. Learning lesson. Hey, Mohammed, that's what you're here for. That's what I'm here for, rather. So glad I could help. All right, so that is gold, number 6. Let's circle back to euro. I do want to touch on euro key, and then we'll hit on Aussie. It's been the most frustrating trade for me this week, just because if it's lack, of momentum, this thing can't get a move. Anyway, let's start off with euro dollar. Here's euro, and here's what euro looked like earlier in the week. Okay, so the threat for the pullback was basically sub 115. We talked about that level. That's sort of the breakout that would need to mark a resumption of the broader trend that we've been in off of those lows that we made. So, man, it tried to make a push higher. It failed ahead of basic slope resistance. We adjusted the slope from these two highs, guys, to these two highs. The gradient has worked a little bit better. Excuse me, but my point being is an objective break of the initial weekly opening range low, gave way to decline. Look where this thing found support. I'm going to take this out real quick to the daily chart. Okay, hasn't been the cleanest slope. Remember this? Guys, this is the same pitchfork, unchanged, that we've been working with since last year. Remember when we first added it? I'm going to keep going over the statement because we were in the webinar. I was like, yeah, I don't know. It's not the cleanest pitchfork, but it's all we got right now, so let's work with it. The upper parallel basically caught the highs. Here's the 25% line, or the lower 50 line, seemingly catching the lows. Couple things I want to note on the euro. A, where we turned and how we turned is a little concerning. If you guys remember the weekly chart for euro, the broader picture for us has been constructive above 113. Such a huge level. 200-week moving average, former swing highs, pivot break in price, former trendline resistance, even on a weekly stretch basis, catching the lows. So the recovery that we got, we talked about 1586, 116. That's the level we need to beat to mark reversal in euro to suggest that a more important low is registered back here in November. We failed there. Here's the pullback, and now we're sitting mid-range. So the reason euro is kind of falling out of focus for me near term is because the range is huge now. It's 113, 116. It's a 300 pip range, and we're only 2 weeks into the year. So that's the range we need to clear to get a more conviction bias on the medium-term outlook for euro, and that's my concern. So from a positioning standpoint, you're right slap in the middle of that 300 pip range. There's not much to get excited about here. Daily chart, again, if that slope is going to hold, this would be a nice area to find some support. Near-term resistance is at the yearly open, 114.46, 114.45. The median line is there right now too. Euro on the intraday looks like this. So again, that downside channel seems to be holding still. And here's where we're trading right now. So I removed this 1438 level, the 50% retracement, just to clean things up, guys. We're trading just ahead of this 1407. Oh, okay. I've adjusted the retracement for the new high. So a quick update to that report from the 14th. This retracement right here, guys, go ahead and stretch that to the actual stretch low that you made back in December. That's where I'm working with the new retracement levels here. So, or excuse me, November. Here's the retracement. The 618 of that is 1350. Just lower is going to be that parallel support. So the threat is still lower in euro, but I wouldn't get too carried away below here. I'm looking for exhaustion either at 1350 or 1320. Keeping in mind a couple of things, that this is the objective yearly and monthly opening range low. So if it's going to exhaust, it would be off one of these two levels. Once we clear this to the upside on a pullback, you look for support along that channel resistance. That would be your entry against the low, and we'd look to play the recovery. But essentially, we're looking for downside exhaustion in the euro at 1350, 1320 in that range. If this is going to work. But I'm more inclined to look for, entries on a drop into this region. Any questions on euro dollar? So that's number 7. Number 8 will be euro kiwi. Was also one that we've been talking about here in the webinars. Euro kiwi has a decent play here in that it broke to the downside here, and I talked to you guys about 66.62 as the next downside target. That 618 retracement. Man, look what happened. It broke below. It almost made a stab at 66, and then here's a massive reversal right back into the 2018 Open. So, to start off the week, we were saying, hey, look, the breakout level would be 69. If we push through that, that's channel resistance. That's last year's Open. That would be the breakout level. But we're looking first for a drop into that 618. Doesn't get more frustrating than this. Here's the drop. Doesn't quite get into the 618. Here's the reversal. Now we're trying to push through channel resistance, 2018 Open 169. So look, on this one, there's nothing to do here again. You've made a push through now through the weekly opening range, but you're at resistance. Okay. If this is going to seriously resolve to the upside, I want to see momentum basically come back into 16 hold support and plow through here. Okay. This was a big, big level. And remember, 67.45, 67.65 was a big level that we had highlighted to begin with, right? Nice Fibonacci confluence. If this was going to hold, that's where we want to see hold for the resumption. We broke lower, but yesterday we made an outside day reversal off support. That's constructive. So long story short, if we close today above 169, I'd be looking for resumption. Okay. If we close sub 169, there's nothing to do. It could just correct lower right from here. But for me, that's not a trade I'd be interested in at this point. Interesting cross, but certainly an outside reversal day yesterday after failure to hold below 67.45 for me was a tell. So quick note there on Euro Kiwi. Last but not least, my friends, Aussie. Oh man, so if patience is a test of willpower, I guess this is as close as patient as I'll get. Here's Aussie rather. The trade, or the focus was to look for the pullback. We talked about 70 to 40. That's the 764 retracement from the decline off the high that we made back in December. But more importantly, it's the longer term slope on the weekly charts. Been pretty clear. A level that we highlighted weeks ago. Specifically on the failure to push below the 2016 low week close, the 2016 low close, and this rebound here. This was the first level of major resistance. Aussie on the daily chart looked like this. Okay, here's the pitchfork that we've been working off of, just off of last year's, I guess 2017 at this point, and last year's high. Here's the median line. I guess here's the intraday chart. This is all we were looking at to start off the week. And here's what we look like into the start of the week. Here's the Sunday open. So, you know, there's nothing to do here. I mean, the trade was early in the week, as I noted on Sunday, was if we get a stretch into 72.54, 72.75, look for failure there. Or if we break the week, or if we open the week and break below the 100-day moving average, I'll look to sell rallies targeting the October low day close or even the yearly open. So what the heck is this? Okay, look, yesterday it broke the initial weekly opening range. That essentially put me bearish, looking for a move lower, but there was no opportunity to enter. There was no conviction in momentum. And even the like session opening ranges for Asia and Europe and the US haven't given you anything. So guys, for me, listen, if you jumped in here on the short early in the week, the first target did hit 71.78, second target almost hit here at 71.45. The levels haven't changed, but man, this is like a very low conviction, even from an intraday standpoint, just because momentum is not doing anything. It's not doing anything. So even if we adjust some of our levels here to some of these swing lows, there's just not a trade here. Like momentum here is breaking below 40, but you're still at swing lows. You're still at support. That 618 is a key pivot from a Fibonacci standpoint. You can see, break, acceleration, resistance, break, acceleration, support. I don't know what to do here, guys. All I do know is that the ideal scenario is to get a larger washout here in the Aussie to position back on the long side ultimately. But near term, again, I just can't get excited about trying to get aggressive here on the short. I'd rather look for a bigger washout to get back on the long side. And we'll have to, cross that bridge when we get there. But, when we have this lack of conviction, guys, when we have lack of momentum, it's, again, for me, it's going to be something where we kind of just need to wait for the market to offer some clarity and get through some of these oscillations that almost seem random throughout the course of the day. But we'll have to pick and choose and wait for our entries. All right. Well, that's all I have on my end, guys. Let me know if you have any other questions or trade setups. Peter, you wanted to take a look at SPX, man. Here's what it looks like. Interestingly enough, that level that we had talked about, I don't remember how long ago we brought this up, but it's holding resistance. And we tagged it yesterday. The level is 26.17 into 26.24. Pete, if you remember, that's the low date close for that drop that we got back in February of last year. The low day close is right there. And then we got the 100% extension of the advance off of last year's low at 26.24. So if the broader picture is still down, Pete, but this move here was just corrective, that's what you'd want to see hold as resistance. Now take that for what it's worth. Again, I don't actively trade SPX. If you had to put a pistol to my head, I would say near term, yeah, you're at resistance. So anything that you take on the corrective side to the downside should be against 26.24. If it gets through this, you're looking for a stretch back up into here. And now that we've made this sort of break higher, a basic retracement of decline off the highs from back here in October, we'll just look at that. All right, let's clean this up a little bit. So there's a 100% extension. There's a 50% retrace. That's your range resistance, I'd call it, Pete. Low day close. Okay, and here's the intraday chart, Pete, the 120-minute chart. So, there's that level again that we had talked about at 26.17, 26.24. I would go ahead and get rid of the low day close. I wouldn't, let me say this, add the 50%. Add this here. Okay, so that's your range resistance. below day close here, you do need to operate that. And again, it's too early to rely on this, but I just want to tack on if this high holds. That 38.2 comes in line there. I'd probably scratch that. There you go. Those are the levels I'd be looking at, Pete. Okay. So breakout, Pete, would be 26.37. You'd be looking for last year's open. And again, that key 618 at 27.08. If we push below 25.80, it's the April 2018 close low. But aside from that, like take that fact out of it, Pete. It's a clear pivot in price, objective, right? Former swing lows, break saw acceleration, resistance at first. If we break below this, it would validate that there's a more important high that was put in here near term, and I would look for a drop towards 25.20, 25.14. Right? Again, a very decent pivot in price and an objective 38.2 retracement. But it's all contingent on 26.37, 26.24 holding resistance. If we get through this, I think you still look higher. The immediate advance in risk in the SPX, in my humble opinion, again, at risk below 26.37. So I hope that helps. Peter says, thanks again. Great as always. My pleasure, sir. Interesting trade. A lot of people are going to be looking at this. You got some weak data out of one of the banks today earlier in the session. You have seen futures kind of slide here ahead of the open. But what came first, the chicken or the egg? I don't know. All I do know is that the resistance level that we highlighted a few weeks back, we're checking that right now. Okay. A quick look at Euro Aussie, please, says Pooja. If you can, just your view on the direction. Pooja, sure. Euro Aus, haven't looked at it. Let's take a gander here. Ew. Ew, Pooja. Well, that slope is done, right? I don't want to sit there and stress this, although it looks like you're checking that right now. $100 days here, 200 days, still. 100. Okay, it bottomed at a very interesting spot, or where we're just rebounding right here. Puja to me is really interesting. The 618 retracement of the basic advance off the low that we made back here in what is that, December. It literally tagged. The low registered at 158.06. This is at 158.08. So where it's turning from, certainly a big level. The 618 extension of the decline off the highs was just lower. So you're talking about like another 18 pips would have caught that. And then you posted a 4-hour outside reversal candle off support. Take a pistol to my head. I would say look higher right now. 159.82 would be the first target. 236. It's also the objective weekly opening range highs. So if you get through 159.80s, basically 159.90s, Pooja, in my humble opinion, that would be validation for a near-term reversal. Yeah, you target 160.37 at that point. You're basically looking for the 100-day moving average and a 38.2. Here's the 120 minute. And again, it looks like you have a couple of triggers here that have already given out, right, on the reversal. Yeah, wouldn't go chasing this for a long position from these levels. If you're holding a long position already, you're stopping against the low. If you get through the weekly opening range, go ahead and bring your stop to break even. And again, 60.37, 60.91 would be your first initial targets. If this fails here and pulls back, look for defense of the Asia lows. If the Asia low holds, or specifically yesterday's US trade session low holds, might be a good opportunity to play back on the long side. But yeah, I mean, if I had to take a position here, I'd rather be playing the rebound on the near term approach to the upside. Okay. Okay, I took the short when you put it on SB last week. Was a good 100 pips, but needed clarity now. Thanks. Yeah, you're more than welcome. So the play, remember last week, was to the downside. You're absolutely right. We had an outside reversal candle there on the daily standpoint, pushing it back into the support structure. The levels were the 200-day moving average and that 618. Both of them have pushed. This rebound here, look for a reaction again into this region here. If we break through this, I'd be looking for, possible resumption to the upside. But near term, that's sort of your level that you need to be to get this thing going up again. And again, aside from what Mike Boutros says or anyone's opinion, objectively, it's a very nice pivot in price, a 236, the weekly opening range high. And again, price action speaks louder than fibs do sometimes. So a quick note there. Any other questions or trade setups you guys want to review? Feel free to throw them on the message board now. This was just SPX 10 and Euro Aussie 11. Quick reminder that Jamie will be up with the midweek, a little bit later in the week, strategy webinar later today at 11 o'clock, just a little bit over an hour here. So don't forget, stay tuned for that. And if there are no other questions, guys, I'm going to leave it there. Remember, again, Monday is a U.S. holiday, so there's not going to be much price action. U.S. markets will be closed. And we'll pick things up right here back on SB on Tuesday morning. So I will see you then. Till then, best of luck trading and have a great weekend. Cheers, guys.